Hello traders, today is the 12th of June 2011 and it's Sunday to you all. For those of you who are new to us, we are the TSTWSYS08 traders. Our website is www.stochastic-macd.com. The title of this video is A Specialist Trader. Do you want to become a specialist trader? How to become a specialist trader? And what is a specialist trader? Okay. Now, many new traders get into trouble because they start trading first and they have not no experience, or they lack enough experience, and they get into trouble and they start losing money, and they are not enjoying their trade, and they don't know what is going on in the forex market or in the stock market, whichever financial instrument they are trading. Okay. One of the solutions, one of the things that they can do, okay, one of the steps that they can take is to become a specialist trader, which means focusing only on one financial instrument. Okay. When I start trading first, as I told you before, if you have been watching our video for some time, you will know my story, and you can also read my story at www.24elliottwaves.com. Okay, and the problem I was facing, that I was trading first the Dow Jones and all the major indices, the FTSE or the CAC 40 and the DAX 30. Okay, and I get into a lot of trouble because I was trading all these indices, but my during that time I was focusing mostly on the indices, but I was not trading only one index, I was trading many indices. Okay, and I get into trouble sometimes, and then I move into currencies, and I was trading all sorts of currencies, and I do not even understand the correlation between currency and the anatomy of the forex market. And it come to a point that I need to reorganize myself and start afresh in order to enjoy my trading. Okay, so if you are in that position now, this video is perfectly suitable for you, so you may continue to watch this video and understand what is going on. One of the steps that you can take is to become a specialist trader, which means take one financial instrument and become expert in it. Okay, that's the key about becoming a specialist trader. Okay, in this video I will show you how you can become a specialist trader. Okay, so if you are trading forex, you may decide, for instance, to trade only the Euro USD. Because you are a new trader, you do not have the experience, you do not have the knowledge, you do not have the skills. You can perfectly start with one financial instrument. You are trading that every day, every night, all the time, paying attention to that financial instrument, trying to understand the volatility, the range, and the personality of that financial instrument. Try to understand also the fundamental that are affecting directly that financial instrument. Okay, so if you are trading also stock, you may decide, for instance, to trade a Microsoft stock, which is not too expensive. So you are trading that stock every day, every night. Okay, over many months. Okay, until you perfect, okay, your ability to trade. The ability to trade is the key, and plus excellent money management. Okay, so one of the steps that you can take one financial instrument. If you are trading crude oil, that's perfectly okay. So you stick with it, you trade it day in, day out, understand the fundamental that affecting the crude oil, and the personality of crude oil, the volatility, the range, okay, and how you can trade that financial instrument. And if you are day trading, during the course of the day, there are some period of the day that we call the gap period, how that particular financial instrument behaves. Okay, so this is about becoming a specialist trader. We are looking now at the Australian Canadian dollar currency pair, the Australian dollar Canadian currency pair. Okay, now before I proceed, is that the Australian dollar currency pair is perfectly overbought currency pair right now, because as the commodity market was rising, so was the Australian dollar currency pair. So if gold is going up, silver is going up, crude oil is going up, you will see that the Australian dollar currency pair, the Australian dollar, not the Australian dollar currency pair, the Australian dollar will be going up. The commodity market, in my view, is perfectly, gorgeously, beautifully overbought, and we will be happy to take any valid sell signal given by the TSTWS S08 trading system. Okay, so now how do we become a specialty trader? So suppose you want to become a specialty trader of the Australian dollar, a Canadian currency pair. So you will know the fundamental, what is affecting the Australian dollar. You will understand the economy of a Canadian dollar. You will keep your eyes on it. Okay, you will read about it, either checking Google, checking Bloomberg, paying attention to the Australian dollar, the country, the economy, their central bank, how they behave, the inflation, and also the central bank decision regarding the interest rate. You will pay attention to that. This is about somebody who wants to become the Australian dollar specialist, or the Australian dollar Canadian dollar currency pair. If you want to trade the Australian dollar Canadian currency pair, you also pay attention to the Canadian dollar and understand the fundamental that is affecting the Canadian dollar. We know that the Canadian export a lot of oil, so if the crude oil price is going up, the Australian dollar, the Canadian dollar will benefit a lot from that. And you compare, okay, the unemployment rate of the two countries, because we are dealing with the currency of two countries. Okay, so that's how you will start the first step that you will take in order to become a specialty trader. The next step is to understand the technical part of the trading, which is knowing your critical price level. We are looking on the yearly chart. The critical price level are the opening price, the closing price, okay, the high and the low of a yearly candle. We are looking here on the yearly chart of the Australian dollar Canadian dollar currency pair. For somebody who wants to become a specialist Australian dollar Canadian dollar currency pair trader, as we see some of the bank, the hedge fund managers, they are specialists of one financial instrument. They may be trading only Google, they may be trading only one session, may be trading only Apple, one session may be trading only the Euro GBP currency pair. So as a new trader, try to become a specialist trader. Very, very important, especially for those who are using the TSTW34, TSTWS08, whichever trading system you are using. Pick one of your best, okay, the one that you enjoy most, and try to trade it. Understand how much stop loss you need for day trading, how much stop loss you need for swing trading, okay. Understand the volatility and the range of that particular financial instrument, and how the particular stock behave at the beginning of the opening bell, and during the course of the day, and the closing bell, and some particular day like Monday and Wednesday and Friday. Check carefully and keep paying attention on that particular instrument, and as you are trading it, you have your notebook, you are taking note consistently, okay. But one of the things that I will reveal to you, that if you want to become a specialty trader, you must know your critical price level. That's the first thing is you need to know, okay, because that's how the professional doing. The critical price level for the Australian dollar Canadian dollar currency pair, we will check the year 2010, which is the previous year. The opening price of the 2010 for the Australian dollar Canadian dollar currency pair, a very important critical price level is 9451. 9451. The next critical level, if you want to become a specialist trader, you need to know the critical price level of the financial instrument that you want to trade, okay. The highest level, the highest price for the Australian dollar Canadian dollar currency pair for the year 2010 is at 10217, 10217, okay. And the lowest price for the Australian dollar Canadian dollar currency pair at 8580, 8580, and the closing price of the year 2010 for the Australian dollar Canadian dollar currency pair is 10211. So the key level for the previous year, you must know it. Now a new year has begun, which is 2011. You will note down very carefully the opening price is another. The opening price of the current year is a very critical price level. The opening price of the Australian dollar Canadian dollar currency pair, okay, very important level that you must note down if you want to become a specialist trader, is at 10150. For instance, if you are trading a QQQ, or you are trading Dow Jones, or you are trading the FTSE 100, you are trading the CAC 40, bonjour, bonsoir, mes amis français, you are trading the DAX 30, okay, good morning for our German friend, you will know the opening price, okay, the opening price, the closing price, the highest and the low of the previous year, and the opening price of the current year. So you must have that all the time in front of you. Whenever you are trading, you can stick it on your computer, you can stick it on your wall, and have it down all the time you are trading your chosen financial instrument, because you want to become a specialty trader. The next thing that you need to pay attention to is the range of the previous year. As you see here, the year 2010, that's the highest point. I draw a horizontal line here, and the lowest point is where I put my cursor now. You will divide that level by finding the median line of the range of the previous year. How do you calculate the median line? You will choose the highest point level plus the lowest point. How do you calculate the median line? I will tell you again, pay attention. How do you calculate the median line of the range of the previous year? You will take the highest price level, okay, which is in this case 102.17. You will subtract, the lowest point of last year, which is 8580. So you will do a highest point minus the lowest point divided by 2, highest point, which is 102.17 minus 8580. And now the result that you will get, you will divide it by 2, divided by 2, and the final result that you get after the division by 2 plus the lowest point. So highest, pay attention, minus the lowest point divided by 2, you will get the result, The result for that, for this currency pair, you will now add it to the lowest point. So highest minus the lowest point divided by 2, you get one result. That result, you will add it to the lowest point. That's how you get the median line of the range of the previous year. Very important. For this Australian dollar, Canadian dollar currency pair, the median line, of the range of the year 2010 is at 9398. That's where I put my horizontal line now. This level here, is at 9398. So highest minus the lowest point divided by 2 plus the lowest point. That's how you will get the median line. Very important. The next thing that you need to know, because you want to become a specialty trader, it does not matter whatever you are trading, whether you are trading crude oil, you can do the same exercise to have your key level, your critical price level, on the yearly chart. Very, very important. Do not trade any financial instrument without knowing the critical price level. That will save you a lot of hassle. So now the next thing that you need to do, you will look at a 5-year candle. Now here I have a gorgeous 5-year candle, 1, 2, 3, 4, 5, because we want to know what is happening within 5 years. That gives you a better, a better understanding, a better evaluation of what is going on in the financial instrument that you have chosen. So you choose the 5 years in a row. So we choose here, we have 2007, 2008, 2009, 2010, 2011. It doesn't matter where you are when you decide to trade. It does not matter, because the year 2011 is not yet completed, but that's perfectly okay. You choose the higher point that you have at that point in time that you started, because that's all you got now. That's what you can work with. So you will highlight the highest point of the range of the 5 candles. So you see all this candle here. The highest point is this level here, and the lowest point is here. You will do you will add the highest point to the lowest point divided by 2. That's what we call the smart median line. That's what we call the smart median line. The highest point of the 5 candle, plus the lowest point of the 5 yearly candle divided by 2. It gives you the smart median line as I'm speaking to you. It may change, because if the price going up across this level, we have to recalculate our smart median line. But where we are now, our present time smart median line, which is a kind of a dynamic support level, is at 8860. That's a very important level, 8860. If the price is going down, as we believe that this Australian dollar, Canadian dollar currency pair is perfectly overbought currency pair, in our view, unless the US economy is still going into trouble. That's very important. You have to understand that if the US economy is still having a lot of problem, if there is no job creation in the United States, if you are still having a poor no-farm payroll, which means the gold going up, crude oil going up, this currency pair will continue movement to the upside. As the things start now, as everything is at the moment, we see a bit of improvement in the United States. We believe that the commodity market should pull down. But if the United States, you have to understand, if the United States is still not performing, then the crude oil and gold will continue to go up, meaning that this currency pair will extend its progress to the upside. Okay, very, very important. So if the price for one reason cross below the smart median line, okay, for one reason or another, we do not say that it will go down there. If it cross that level, very important, okay, and return back above it at one point in time, very important. Suppose it cross down below the smart median line at one point during the year, maybe after 2 years, maybe after 3 years, okay, goes below the smart median line, and one day, okay, for one reason or another, it return back above the smart median line, that will become perfectly bullish. Okay, that's the key thing that you need to remember regarding the smart median line. For instance, if we have a financial instrument that was going down and we calculate the smart median line, which means the price is already below the smart median line, if for instance the price for one reason or another, one day or another, okay, return above the smart median line, that will be also bullish. But if the price for one reason goes below straight away the smart median line, we will look for opportunity to sell, because if you fail to find a support at the smart median line, there is a more bearish pressure. It does not mean that you go and sell anyhow, but you use your tool to sell like a professional trader. Looking at this yearly chart, drawing the Fibonacci retracement from the lowest point of the 5 years range of this 5 candle, from this lowest point to the highest point, okay, the price is well above the 23.6% Fibonacci retracement level. We believe that this Australian dollar, Canadian dollar currency pair should come down more. Okay, the critical price level that we are talking about the closing price. The closing price of this last year, 2010, as I told you already, is at the level of 102. Okay, 102.11, 102.11. The price above that the critical price level right now, as you can see, but you must pay attention to that critical price level at 102.11. If the price crosses below that, okay, the next critical price level is the opening price of this year 2011. Very important, a critical price level. The opening price level for this Australian dollar, a Canadian dollar currency pair for this year 2011 is at 101.50. Do not forget 101.50. If one day, as we are expecting this currency pair to go into the downside, if it cross that level of 101.50 and a final resistance below that, that will be a sell signal. Okay, if it goes below it, that 101.50 and a final resistance below the 101.50, that will be a bearish party, so to speak. Okay, so pay attention to the closing price of last year and the opening price of this year. Okay, very important. The opening price of this year is too important to be discarded. Okay, so to speak. Watching the range, also talking about I'll move now. This is what I can say now for regarding this yearly chart. The price in an uptrend like this nicely, you can see that there is a bit of bearish pressure, because if you project the range, as I told you before, this range here, the range here, you project it this range from here to this level here, you project it to the other side. Okay, if you divide this range in two, okay, in two here, okay, you project half of that range up to this level here. It brings us above this level here, the highest point that we achieved this year, where the price did turn around. Okay, for those of you who have been watching our video for some time, you understand the projection now. Going to the monthly chart, talking about being a specialty trader, which means you understand the critical price level. Okay, you know the behavior of this financial instrument that you are trading. Okay, the behavior, the personality, the volatility, the range, the smart median line, the critical price level, the closing price, the opening price, and you are ready for it, and you understand what's going on, because we know that the commodity market is in the overbought zone right now. Okay, so money will come out of the commodity into the dollar. That's what we have seen. All the financial instruments that were performing badly during the bullish season of the commodity will start a new bullish season when the commodity market is pulling down. Okay, so we are watching all the Australian currency pair, Australian dollar, Australian yen, Australian, Canadian, anything starting with Australia. We are looking for opportunity to sell. If you receive a clear-cut signal to sell, as you have seen last week, was perfectly bearish. And next week we may see a bit of a retracement, which means a rally in a downtrend, a bit of rally in a downtrend, which means a kind of profit taking, giving us another invitation to sell if we receive a clear-cut value signal to sell. Okay, so moving on to the monthly chart. So you start from the yearly chart, you go down to the monthly chart. Very important. Even if you are new trader, these are simple truths that you can do at any point in time. Looking on this monthly chart, what do we have here? Okay, we see that the price went down here and found a support. This support level here has been broken. You see, it's a bit of exaggeration here, because in fact the price should turn around here, but the price went down, okay, below that key level, only to return above it. Whenever you see a previous low being violated, which means the price break the previous level, which means a support has been broken. If the price for one reason return above that support level and find a support, as you did here, you see this candle here, you break it bullishly with this tall candle and retest it with this one. After the bullish candle that follow here, that's a gorgeous time to buy. You see the tall candle that follow that. Okay, price break a support level and return above the support level and then retest it and find a support right there. That's a buy signal. Okay, it went up big time. Okay, looking at this monthly chart, we see that the price went up from here all the way up here. If we draw the Fibonacci retracement, okay, I hope I'm not speaking too fast for you, but the gorgeousness of watching a video, that you can go back and watch this video as many times as you like, okay, and there is nothing stopping you to watch it 100 times if you want to, okay. So we can see that the price went up from here up to this level here. I will discount this exaggeration to the downside, because I'm more concerned about the 90% of the price movement. So from here up to this level here, we can see that the price retraced down to the 61.8% Fibonacci retracement level of the movement from here to here. If you want to master the subject of Fibonacci, pay attention. You need to go to www.dayprotraders.com to learn to master the subject of Fibonacci retracement, Fibonacci extension, or Fibonacci projection. Very important. The price retraced to 61.8. The next target in the zone of 1 to 7% Fibonacci projection zone, at least, okay, at least, okay. It does not mean that the price will definitely turn around here at 1 to 7, but at least the price has a high probability, or has a high chance, okay, to reach the zone of 1 to 7% Fibonacci extension or Fibonacci projection zone. The price went up from here at 61.8, and where the price did turn around, in a zone of 1 to 7% Fibonacci retracement level. It's not perfectly turning around, but the price is under bearish pressure here. You see these two candles here. This is what we call one up, one down. This is one down. Okay, you see that this hammer here is down, and one is showing a kind of a dodging going up. We will see at the end of this month of June, if we have this pattern of one down, one up. The next month we'll watch carefully to look for a clear cut sell signal after this one up, one down candlestick pattern. But this monthly candle of June is not yet completed, so we are watching this pattern carefully. Or the candlestick still needs some traders will watch this pattern carefully for this currency pair, okay, the Australian dollar, Canadian dollar currency pair, one up, one down on the monthly chart. Okay, so this is where we are. The price, the reason, your attention please, the zone, the price level of 1 to 7 Fibonacci, okay, projection is at 105.18, 105.18, okay, right below where the price did turn around. Okay, the price went to 105.51, 105.51. That's why the price reached the highest point, but the 1 to 7% Fibonacci projection zone is just right below it at 105.18. So you can see that there are traders taking profit right now. This is what we call a hot spot trading zone. This video is about a specialist trader, okay, how to become a specialist trader, okay, and we are showing you the step that you will take from the yearly chart to the monthly chart. Know your key level, draw your channel, draw your trend line, draw your support level, draw your Fibonacci retracement level, draw your Fibonacci extension level, know your critical price level, understand the financial instrument that you are trading, the fundamental, the implication, and the rotation of the market. What do we mean by rotation of the market? The rotation of the market is that money go into one financial instrument until that financial instrument becomes overbought, then money come out of that financial instrument and go into the oversold financial instrument, and the cycle is just going on. Money come out of one of financial instrument, money is coming out of one financial instrument into another financial instrument. We are expecting money to come out of the commodity market into the dollar. Okay, so pay attention carefully. This is the weekly chart of the Australian dollar Canadian currency pair. Okay, pay attention carefully here. This is on the weekly chart. Okay, we can see clearly that the price went down, display a gorgeous double bottom pattern. The nut, as I like to call this zone, has been broken and retested here. For those of you who have been following us for some time, you know that this is a gorgeous high zone. People responded and bought it, and the price went up. Okay, it went up to the beginning of the whole thing, total retracement of this down move to the downside. Price retraced back down, okay, to this level here, almost at 61.8%, and then went up again, okay, and continued movement to this level. Talking about the projection of a channel, for those of you who have been following us for some time, you understand the drill now, okay? The drill is a projection, okay? If you want to become a TSTWSY08 trader, you need to go to www.stochastic-markda.com before it is too late. Now, we are talking about this level here. You see from here to this level here, that's the first range, highlighting the zone of consolidation. A double bottom pattern is a consolidation zone, okay? We will project that range to the next level because the price break above it. It brings us to this level here, okay? And then we project it again, and it brings us here. So first channel from here to here, okay? We project that channel to here. So then we project it again, and it brings us here. If we divide this channel in two, okay, half from here to this level here, okay? From here to this level here. If we project that half to the other side, you can project the full size of the channel, or half of the size of the channel. You can project the full size of the channel, or you can project half of the size of the channel. Projecting the half of the channel here, okay, from here to this level here. If you project it to the other side, it brings us right above where the price is turning around now. Isn't it very gorgeous to know all this, okay? To locate your hot spot trading zone, to know where is the smart money hiding, okay? These are the areas where the smart money will take action. Either they will take profit or they will reload it, okay? We are approaching, we are at a hot spot trading zone in the zone of 1 to 7% Fibonacci extension zone, and also at the 3-time projection of the channel. Okay, we are watching for a clear-cut sell signal in this zone of a hotspot trading zone. This video is about becoming a specialty trader. So if you have been wandering around, okay, trading this, trading that, you do not know what to do, pick up one financial instrument that you enjoy. If you like to trade gold, concentrate on gold. Trade it day in, day out. Know your key level. As I told you before, do as I show in this video. You can go back and watch this video all the time. Take it like a new beginning for yourself. If you have been losing before, take it like a new beginning for yourself, okay? Try to abandon your bad habit, because there's nothing, okay, that can move forward for you if you do not change your own bad habit, because don't become your own worst enemy. Locate your bad habits, okay, where you have been cutting corners, okay, and try to give yourself a new start, or pick up one financial instrument, trade it day in, day out, okay. Use the 5% money management rule. Always use stop loss. Tell yourself that I can do this, okay, and try to do it properly, okay. Looking at the daily chart, okay, I hope you will do it properly, and send us excellent messages, okay, and to tell us that you have been enjoying your trade, okay. This is what we want you to do, and we expect you to do it, and we believe that you can do it. Looking at the daily chart, what have you said? What did we tell you before? What we have said before is that when you come to the daily chart, okay, do not forget this. When you come to the daily chart, look for channels. The daily chart, as I told you before, is the time frame for channel. It's just so simple. Always look for channel on a daily chart. I will show you how to draw a channel. You need the 2 points to draw a channel. 2 points on the bottom if the price is rising. 2 points at the bottom, okay, of to draw a channel. So I'm choosing this point and this point, okay. So that's what I'm doing now, okay. Then I will choose 1 point at the top, just 1 point, okay. That's it. I choose another point at the top and I will make that line parallel. That's it. Okay, that's my channel. Okay, the next thing, you can perfectly draw your middle line. You see how I'm doing it here? You can do that. Okay, I'm not using any it's not exactly half, but we can accept it as a half like this. Okay, if you are very, very straight, as I know some of you are very, very straight. Okay, alright. Okay, now I'll draw it instead somewhere here, if you don't mind. Okay, if you're happy. So I have a channel, okay. So what the price doing now? The price going in a kind of a horizontal channel, okay. As I told you before, always draw a channel on your daily chart. It will keep you out of trouble, okay. So we can see another channel, and this time this channel is horizontal. You see, hit it here, come down, hit it again, come down, blah 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 blah. It pop above it, only to return it below it. This horizontal line, this horizontal channel, we can draw our median line, okay. And you see now, it becomes very clear on the daily chart, and we are at this median line or for the horizontal channel. Always on the daily chart, be busy, very busy drawing your channel. If you do not see any channel, be very careful. The price always going to channel, okay. Either the channel is rising or the channel is horizontal, okay. I hope you promise me that you will do this all the time, okay. If you start trading, okay, and you fail to draw the trend line, do not enter the trade. Always draw your channel on the daily chart, know where is the price, where the price going, and do not hesitate to project, okay, your channel as we have shown you this 100 times. I hope you enjoyed this video and that you will put into practice to give yourself a new beginning and to become a specialty trader. Thank you for watching, and we will speak to you very soon. We are the TSTWSYS 08 traders.